The cost of shipping goods from China has hit record highs, driven by a critical shortage of containers during the pandemic. It is also causing delays in delivery. Compared with low prices last March, freight rates from China to the US and Europe have surged by as much as 300%. And there are a few factors driving this shortage. China is exporting much more to the US and Europe than it is importing. And China's economy has been recovering faster, rebounding since the second quarter of 2020. Thousands of empty containers have been stranded in Europe and the US since the first half of 2020. And that was when shipping lines were forced to cancel hundreds of trips as lockdowns caused a sudden slowdown in global trade. When Western demand for Asian-made goods rebounded in the second half of the year, competition for available containers sent freight rates soaring. The shortage is made worse by limited air freight capacity as global flight volumes plunge. The container crisis affects all companies that need to ship goods. But analysts say e-commerce companies and consumers in particular may bear the brunt of higher costs. For a closer look at the impact on consumers, we're joined by Gopal R. He's a global leader of supply chain and logistics practice at Frost Sullivan. Gopal, well, how is this going to impact consumers? I mean, the shipping cost has to be passed on some way, somehow.
True. So, of course, you would see that in certain cases, the costs go up, as well as you rightly started saying. So e-commerce bears the brunt primarily because a lot of people over the last 3 quarters have started consuming a lot of stuff through e-commerce. So which means the retail activity has actually shifted to e-commerce primarily because of the pandemic scenario. And of course, the fact that if you look at almost the same time during the last year when the whole pandemic started off, so there has been a significant crunch in the ocean freight capacities. In fact, most of the trade lanes actually saw the capacities dip to almost just about 20% of the available sea freight capacity. And over the last 3 quarters, this 20% has slowly, improved, and it is actually just catching up to the people, the lockdowns getting lifted and consumers starting to buy, significant portion through e-commerce, etc. So the consequent reasons because of which you see a significant increase still in the prices for sea freight, and not just sea freight, but in general for freight.
Yeah. So, how long is this severe container shortage likely to last?
Yeah. So interesting thing is, when the whole trade flow used to keep moving around, nobody talked about the fact that there is this concept of empty container repositioning, because empty containers used to have, obviously, circle back to where it is required. But the fact that there was a, supply chain shock effective Q1 of 2020, where, a lot of ships were stranded in certain locations, containers were stranded in certain locations. It was the manpower was not available, ports were, congested and so on. So consequently, it took, a good 3-4 quarters to actually stabilize. And typically, for the container movements to smoothen out a little bit, you need a full quarter of trade flows to at least resume close to normalcy. So I would expect, while there's a little bit more optimism of 1 quarter, but given the fact that we are again seeing a surge in the number of cases, and although we may not go into a lockdown in many places, but there'll be a little bit more restrictions. So I would expect at least about 1 to 2 quarters for the entire trade flow and the container repositioning to become normal. So I would say by mid of 2021, you would probably expect that, this probably doesn't create a price increase.
Yeah, but at this point now, I mean, seafood exports, well, that's been affected. Which other sectors are suffering?
Yeah. So the reason why seafood is because, in the whole subset of these containers, you would see that about, I think, around roughly about 10% of the number of containers is actually these refrigerated containers, which is the reefer containers, which is required to move, perishables and seafood and so on. Now, obviously, with the 90% having the challenge, of the 180 million or so, the 10% obviously faces of the reefer containers face more acute challenge. So that's the reason why you would hear that things like seafood and perishables, these have a little bit more of an acute challenge in terms of freight capacities. But the fact that now the business has started rolling back from China to the rest of the region, so any country which has a dependence on China as a supply chain partner will certainly have an impact, which pretty much makes the rest of the world, I suppose. So you would have primarily segments like electronics, service parts, specifically automotive or industrial service parts, furniture, household, toys, and the fact that significant part of e-commerce products comes out of China. So these are the segments you would actually see a little bit of a restrictive flow in terms of product movements and capacities from China.
All right, thanks very much, Gopal R, speaking to us there from Dubai.